Yo, what's up, you guys? Welcome back to another weekly market update. Today, we're going to talk about PPI, and then I want to give you guys an update on the market from a technical perspective. Without any further ado, let's get straight into it, right? Now, quick. PPI is the same as CPI, but the CPI measures consumer spending, and with the PPI, that is the producer price index, which basically measures inflation from the producer side. But also keep in mind that producers normally pass that inflation. So if there's any inflation attached to from the producer side, that inflation gets passed on to the consumer, but it's not as aggressive as the CPI data because consumers is basically being, they more, no, I'm not going to say more important, but that data counts more in the market. Now, let's go away from this, right? We're going to start with the dollar index. Now, clearly, the dollar had a very bad run yesterday, and that is directly because of the CPI. I see some people out there talking about, no, this is not because of that is not because of that. Don't tell me if I tell you what it is about. Now, I'm going to tell you now again what's going to happen, and then you can write another poem about me. But let's just continue. Now, the first thing that we can obviously see over here, that yesterday's CPI data clearly sent the market down out below. Now, you can go look at the video that I made yesterday to understand some of the reasoning behind that. But what we have over here is a market that had now broken below this very strong level of support. Right now, I'm going to talk about support and resistance again. I know some people are like, "Aye," but the market broke below support. Now, if you look left over here, you can also see that the market had printed an equal low. After an impulse, you expect a correction before a continuation to the downside. Also, if you take your Fibonacci from the high to the low of this massive impulse, you can see that we do have the 0.50 Fibonacci level that's lining up perfectly with structure, which is giving us an indication that that we can expect a 50% pullback, which is about 50% of this massive impulse over here. Now, moving forward, I do expect the index to slightly increase in value before continuing down as well. German 30 on the other end also has been very aggressive. Okay, if you guys remembered, I did the last breakdown on here. I said, wait for clear break above structure, that pullback. This market basically started to run away as well, right? But what we have over here now is we got a market that's currently broken above this very important structural level over here. Now this level over here acted as support, market broke below that, tested it as resistance twice, broken above resistance. The market's now testing previous resistance over here, and this resistance that the market printed here now got broken and is acting as a level of support. Now, because we are currently trading at this level of resistance, I do expect the market to continue slightly higher, get a pullback in the market before we see that continuation in the market. Next up, we've got the NASDAQ. Now, there is a lot of people out there saying that, no, you can't buy the NASDAQ. No, you should not buy the NASDAQ. The biggest stock market crash is coming. Take your money out of the stock market. My friends, yesterday we bought the NASDAQ and the Dow Jones just before the CPI data came out. Some people say, no, don't buy the NASDAQ. No, you should not buy the NASDAQ right now. The market is currently trading at resistance. Now, it doesn't take an expert who's going to charge you a lot of money for a course that they got from Baby Pips in order to understand this, right? That's simple price action. Why should you pay anything for this information? But in any case, the market is still very bullish. You can still get into this market and buy. Any Nigerian that tells you you cannot buy the NASDAQ, you should not buy the NASDAQ, you should stay away from buying the NASDAQ, don't know what they're talking about. We are going into festive season now, and you can definitely expect stocks to continue to climb. Now, they say a stock market crash is coming. Listen to me properly. Do you know what it means when a stock market crash is coming? This is what happens when you keep sharing tweets that you get from Twitter, or you screenshot information you get from CNBC without understanding the reason why the data moves the way that it does. Now, let me tell you quickly, a stock market crash requires at least 10% bearish momentum in a short amount of time to happen. The S&P 500 moves at least 5% for the year. How is the stock market going to crash 10% in such a short manner of time? No. Now, tomorrow, the NASDAQ prints a red candle and people are like, yes, the sell is there that we were speaking about. No. The sell is not coming. The crash of the market's not going to come. The market's going to U-turn, that I can tell you. But that is basically just an impulse correction and then a continuation there to the upside. Right? Come on, guys. Right? Now, stop selling your stuff. Because you guys want to sound smart. Want to sound smart to the people so you can charge them a premium. Charge them price. No, guys. Leave that. Leave that. Stop telling the people don't buy this. Yesterday we bought it. No problems. Any case, this market over here, according to Baby Pips, is trading at resistance over here. As you can see, the market's currently trading at resistance. Apart from that, the market broken above. Very strong level of resistance here as well. Now, once resistance gets broken, it obviously becomes support. I do expect slightly higher and then a dip. In fact, I do expect the market to give us a U-turn, a pullback before a continuation to the upside. Still very bullish on the stocks. Inflation has cooled down tremendously well, although some experts that keeps running away is saying that it is not the cause for why the market's moving, because someone on Twitter said so. You need to start following the actual data. Yes, it comes from Forex Factory. Any case, next up we've got the Dow Jones. The Dow Jones, as you can see over here, exactly as anticipated, market moved higher, broken above that structure, created what your experts called a triple top. No, what if the market prints another one? What would it be called? A quadruple top. Now, let's look at the price action we have here, right? The market had definitely broken above. Excuse me. The market printed support over here, broke below support, tested it as resistance once, twice. It's back there for the third time. You know, in a situation like this, I would definitely expect the market to creep in slightly higher before it pulls back to come and retest this previous level of resistance over here that had broken above. That is now acting as a level of support. Next up, we have gold, right? Gold. Now, gold obviously started to move to the upside because of a weaker dollar. But what we have over here is the market had now completed what's known as an overextended M formation. After an overextended M formation, you expect a pullback to the left leg. And that is exactly what we have over here. Now, keep in mind, gold also broken above this level of resistance. So I do expect gold to go slightly higher and then make that U-turn. In fact, the U-turn could potentially start there and then wait for the market to continue to the upside. That is it from my side. Thank you for your time. And please, 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 I urge you, do not fall for these scammers. Nigerian scammers, whatever scammers you want to call about. Yeah, imagine you make 100K but you sell all kinds of stuff. Any case, thank you for your time. And as always, cheers for the years.